Welcome back to the channel. In this video I will do a trade review for my recent positioning in ASML. This trade resulted in a 35% gain on position, and I will walk you through my thought process during the trade, what I did good, what I could have done better, and some lessons learned for the future. So let's jump into the charts. Let's start from the beginning. Let's remove all of the drawings and zoom out. This is a stock that's been on the market for quite some time. If this chart is correct, we first listed it back in, what is this, 1995. So from the IPO to the all-time high, 35 well, it's 35,500%. Yeah, it's been here for a while. But most recently, at least for the past few years, we have seen a very strong move to the upside. Strong bullish momentum on the monthly time frame. And then in about a year ago, in July, we had an all-time high at $1,100. And then since then, we actually broke down to the downside. We had a bearish shift to the downside. This was confirmed in September, so exactly 1 year ago. So basically, we had this move to the upside, strong bullish market structure. And then in this area here, first we swept the liquidity from this level, and then price started to move to the downside. And once we closed this monthly candle below $871, that was actually the time to exit the market, because now it's a high probability to move further to the downside. And one of the key areas for support on this move to the downside is actually this monthly order block at $674. And you can see that it actually respected that level quite well. And then price started to retrace to the upside, but still in a bearish market structure on the monthly time frame. And then again, we swept the liquidity this was back in April, so this was the tariff crash in the beginning of the year. And what's interesting here is that actually we swept this local liquidity, but we did not invalidate this bullish order block. So when we were at this location here, that's when I really started looking and plan my way of how to handle the price action going forward. And now I'm switching to the replay function here. So there. So in the middle of April, when this happened here, I was looking for two different possibilities of price movement. So the first alternative that I saw was that this could have been a liquidity sweep followed by a bullish price action. So like this. So if this would have happened, I would be waiting for a confirmation above this this level here, which is $740. So I was either waiting for this scenario to play out. My other alternative was that we would continue to the downside and then actually sweep the liquidity below this low here at $564. And then after that, possibly price could build strength to move further to the upside. So the key level for me was the $740 for both alternatives. And since we actually ended up sweeping, very strong reaction after sweeping the low here, we made it to the upside, and here I was again waiting for a monthly close above this level. That for me is a strong indicator of a bullish reversal pattern and a trigger for me to start looking for a trade. And as you can see here, actually when the month of May closed, we actually closed below this value, and we opened still below this value. So for me, that was not a confirmation to move into a trade. And I was actually waiting for the June candle to close, which we did at $800. So when this happened, this for me is a strong confirmation of a bullish reversal pattern with a high probability of a move to the upside. But again, I don't enter a trade on a monthly confirmation. I always wait for a retracement to get a better entry point, a better risk reward. So when this happened here, I was eyeing two different levels. The first level was this newly formed bullish order block. At 722 up to $746. So that would have been a, let's say, high conviction possibility to move into that area, seek that liquidity, and then continue further to the upside. And the target I had for this move here is a retest of this bearish order block at $943. So that was my main target for this trade on the monthly time frame. And you can see here, if I would have entered at the monthly close, for sure I would keep my stop loss at the low, local low here at $578. The risk reward would only be 0.64, not great. So I wanted to wait until this level here on the monthly time frame. And once this happened, I also started looking at the weekly time frame to see if there was any liquidity levels or high conviction zones that price might possibly retrace to. And here I was waiting for this weekly, untested weekly order block. At 676 up to $687. So for me, my main interest here was to see price starting to make a move to the downside, and then ultimately reach this level, build some strength, and then continue to the upside. So I had two levels in mind. First, I had this weekly level at let's say $688, and I had this monthly level at 746 and 722. And the way this played out is that I entered my first position. See if I can find it. I think this is my first one. Yeah. So I always post my trades live on Twitter. So if you're interested to see how I manage positions in real time, please follow me on Twitter. So I actually entered at $736. Again, kept my stop loss at $578. I was targeting $940. entry was 736.25. And when I entered this position, I still had in mind that we would retrace all the way to $688. I only added half my risk at this position. And I was willing to wait for the remaining retracement if we were to have it, which you can of course never know. And now I will play forward a little bit. So this is where I entered on this candle here. And then price started to move further down. And then ultimately tapping into my high conviction weekly order block or bullish or a support zone, bullish support zone. And let's see if I can find my second entry. This one. And this is where I added to my position at $689. Again, kept the stop loss the same. And now my average entry for these two positions here was $713. And I still kept my target 940. And here you can see that that would end up, or that ended up in a risk reward ratio of 1.7. So for me that's great. I actually went in heavy on this position. I opened the trades with the same entry points on both my main trading account and also my 25-year trading experiment, which is my public account. You can follow it on my website, tradergood.com. I have a dashboard where I'm showcasing the performance, the different trades I'm participating in, the current portfolio allocation, the risk per trade. I have all the buy and sell links to my Twitter account. I keep my realized P&L and win rate. All of this is documented, shared with you if you're interested to have a look at it. And also, of course, the year-to-date and also month-to-month performance for this portfolio. So after I had entered these two positions here, my first target that I was considering to take profit was the newly formed weekly bearish order block, which had formed on this move to the downside. And it's located at the $778 to $785. So one thing I was considering after we had reached this support zone, I was considering to take profit on a retracement to the upside, possibly rejecting at this resistance zone, and then possibly getting another move to the downside where I would have entered into the position once again. But for me, this was not worth the risk to exit the trade, since my main target was the $940, and the move from this resistance zone to where we possibly could have entered again is only 10, maybe 5 to 10%. So it was not worth it for me to do that. So I stayed in the position. And again, the target for this trade was $940 on a monthly time frame. That actually also aligns with this liquidity level here at $940 on the weekly time frame, where we also have a gap to the upside after we broke down back in July last year. So there was a lot of different confluences of why price most likely will make its way back to $940. And now I will fast forward a little bit. And yeah, this is interesting. So when this happened here, when we opened the week here, having quite a big of a drop, that happened before we had tapped this weekly order block. So for me, when I saw this, I was not worried that we would completely break down from here, because we had not tapped this level. If we would have tapped this level and then opened the week here, I might have considered to close the position expecting further downside. But when this happened, I was quite confident that we would move further to the upside. And we could see here as well that when we opened the week here above this weekly resistance zone, that for me again was a strong indicator that we would move to the upside. And then the week after that, very strong opening 4% above this previous highs. So now we also had a bullish reversal pattern on the weekly time frame. So when this happened, I just sat back and waited for us to reach this $940 level. And this is actually where I exited the trade. So let's see if I can find it. Yeah. So I closed 100% of the position at $930. And the reason for that is that although I have a high conviction we would reach 940, and we might do that next week or the week after, I do not want to risk round tripping any of the profits. For me, these small differences between 930 to 940, which is, how much is that? 1.5%. For me, that's not worth it to possibly leave profit on the table. So this is where I exited the trade. And then going to the monthly chart again. What to say, this is definitely one of my best trades for 2025. I do believe this can keep going to the upside, but for me, I'm not sticking around to see if that will happen or not. I exited 100%, banking a 35% gain on position, and this was also a significant position for my both portfolios. And if price keeps going up from here, that's fine. What I do expect is that we will most likely have a retracement the next coming weeks, and then possibly make our way down to this newly formed bullish order block. If that happens, I might consider re-entering the trade. Let's see. And if we instead have a very strong move to the upside, making a bullish reversal above this level here, that for me would be a very bullish move, where only, yeah, that's new all-time high. Who knows where we're heading? But then I would most likely also consider re-entering on a bigger retracement to the downside. So I think if I were to be a little bit critical to my trading performance for this trade, I think that I possibly could have waited to re-enter my first position a little bit further down. In that case, I would have a better risk reward on this trade. But at the same time, what if we would have rejected just at this beginning of this monthly order block, and I would have waited for lower? I would not have the possibility to be in the trade. So that for me was not really worth it, but that may be something I could have done better. Another thing is that I could have possibly taken profit here just to minimize the risk, but again, if I did that, the actual overall P&L would have been lower. And yeah, it's the highest conviction trade this year. Maybe I could have gone bigger size, bigger risk. That's something I will be considering for the future. But generally this worked out well. All these trades were shared live on my Twitter, so if you're interested, check that out. And very important, this is not financial advice. I'm not a financial advisor. I'm just someone who likes sharing my story with the like-minded traders on YouTube and Twitter. So thank you very much for watching, and see you in the next one.